Welcome to the How of Business with your host, Henry Lopez, the podcast that helps you start, run, and grow your small business. And now, here is your host.
Welcome to this episode of the How of Business. This is Henry Lopez, and my repeat guest is Gerri Detweiler. Gerri, welcome back to the show.
Oh, my pleasure to be here.
Absolutely. You're always my go-to source for anything financing and credit, which is what we're going to talk about today, in particular business credit. Gerri was a wonderful resource for me way back in those COVID days. I had her on several times to help navigate all of that. But she's back with me today. Today, we're going to talk about one of the most misunderstood, perhaps, but most powerful tools that a small business owner can have, and that's business credit, credit in the name of the business. So what is it? How does it work? How to use it to open doors for financing, for vendor relationships and negotiating terms, and for overall growth of your small business. So Gerri Detweiler is a longtime credit expert and an education consultant, and she's helped thousands of entrepreneurs to make smarter decisions about credit and financing. I'll give you more of her bio here in a moment, but you can find all of the resources, including a free guide that Gerri's going to offer, as well as the show notes page, or on that show notes page is where you'll get the link in case you can't write it down. Find all of that, as well as more information about my one-on-one and group coaching programs at thehowofbusiness.com. I also invite you to consider joining my business networking group, my community on Patreon, and please subscribe wherever you might be listening so you don't miss any new episodes. So let me tell you properly about Gerri, because she's got such a varied and experienced background. She has spent more than 30 years helping people make sense of credit and financing, with a special focus on helping small business owners. As an education consultant for NAV, N-A-V, if you haven't heard of NAV, we're going to tell you about it on the show. But as an education consultant for NAV, she guides entrepreneurs in building strong business credit and understanding how it can open doors, as I said, for growth or growing your business. Gerri has answered thousands, literally thousands of credit questions online, written on countless blog posts, and has authored 6 books, including Finance Your Own Business, Getting on the Financing Fast Track, and has been interviewed in thousands of media stories as a trusted credit expert through her widely syndicated articles, webinars for organizations like SCORE and the Small Business Development Centers, as well as educational videos. She makes complex financial topics clear and practical, which then empower us as business owners to take control of our credit and grow healthier companies. As I said, Gerri's been on the show multiple times, and so I welcome her back on the show today. Gerri, thanks again for being with me.
I'm glad to be here.
Excellent. Well, let's get right into it. We're going to talk about small business credit, what it is, what it's not. As I was doing some research for this and preparing the questions, the thought that always comes to my mind is it really possible? What is it? I think that people have this misunderstanding that I'll just create an LLC and all of a sudden I have credit in that LLC, and that's couldn't be farther from the truth, right?
Yeah.
But we can over time build credit. But let's start there, I think, because I think that is a misconception. And it always shocks people when I tell them, you could start a business, an LLC, but then let's say you go get an SBA loan or any kind of a loan to fund the startup. You still have to guarantee personally, right? So it's not really, you don't really have any credit there to start with. You have to build that over time, right?
Yeah, absolutely. And this is a confusing topic for a lot of business owners because they haven't directly encountered it in their business. So maybe they have been turned down for something, some financing or some opportunity, and they didn't even realize that their business credit was part of that decision. And I'll give you a quick example of this, Henry, from NAV's co-founder, Levi King. He had a sign manufacturing business. He bid on a dealership project that would be putting the signs in several dealerships. It was a big deal. And he knew he was competitive with his offer. He knew it, but he didn't get the job. And so he bugged the manager, bugged him until he finally showed him. And what happened was Levi's business had acquired the assets of another sign company that had gone out of business. And the credit bureau associated his business with that business, which did not have good credit. And so it looked like he didn't have a good credit history. And so there are things that may happen behind the scenes that aren't clear because the system is fairly opaque. I mean, it's there, it's not regulated like our consumer credit reports are. And so you do not need to be proactive about it before, you get turned down for something and you don't know why.
Yeah, no, that's a great eye opener. I didn't even have thought about it from that perspective because, of course, whenever I've bought a business, for the most part, I've tried to make it an asset purchase so I don't inherit those liabilities, but I could still get inadvertently associated with somebody else's prior liabilities when I buy a business. A great point. And to your point, it's very important as well. Unlike in personal credit, where there's a score, there's a process, there's a system in place, however flawed it might be, the equivalent does not exist in business, correct? As you highlighted.
Right. So you have these credit bureaus, two similar names in there, Experian and Equifax, because they both deal in both personal credit and business credit. Then you also have Dun& Bradstreet, which is actually one of the oldest credit bureaus in the USA. I mean, Abraham Lincoln worked for them
That's
back in the
right. That's
days.
right.
They've been
I
around for a
happen to have
long, long
worked with them,
time.
and one of the software companies I worked for in the early '90s happened to be owned by Dun& Bradstreet. It's the only reason I know that
Okay.
trivia.
Yeah, yeah. So they've been around for a long time. And the what hasn't happened is we haven't had the same evolution in the regulations. So on the consumer credit side, since I got into this field, we now have free credit reports. You get credit scores for free in lots of places. You get disclosures that say, hey, you didn't qualify for our best rate. Here's your credit score. That doesn't happen on the business side. And so it's still a bit of a mystery for a lot of business owners.
And so let's touch a little bit more on what the impact is of credit or no credit, or the example or story you shared of where somebody else's bad credit got associated and it cost them an opportunity, a significant opportunity. Typically, though, what we're looking at it is our business credit to help us get some level of financing, but it can be even before that to get better terms from a vendor, to not have to pay cash on delivery, for example, could be critical to a business's cash flow, but I'm only going to get that in part because of the credit that I establish, or other components, my payment history, how long I've been in business, but then that credit background might determine whether or not a vendor will extend any terms to me, right?
That's right. And if you are a newer business, you may not be super familiar with the whole supplier credit ecosystem, but it's a very important one. A lot of businesses use that, as you mentioned, for cash flow. So they start with maybe net 15 terms where they have 15 days to pay, and then they get net 30. And maybe they build a really good relationship. They get net 60 terms, and that gives them time to get what they need, provide the product or service, and get paid out of cash flow, right? So
Yeah.
it's a big cash flow tool that's very important. And the other thing about supplier credit is they usually don't check personal credit. I mean, they can, it's certainly possible, but they don't usually. And so that means it may be open to business owners who maybe don't have stellar personal credit scores or haven't built a lot of personal credit, but still need some sort of financing to help with the cash flow. So it can be very advantageous, but a lot of those companies will check business credit, and they may not even be looking for a score. They may just be looking for the information that helps them understand the financial capability of the business and the legitimacy of the business. Because what a lot of us going into business don't understand, we go in to make money, and there are people going to form businesses to launder money or to steal money, right? And
Right.
so you need to be able to demonstrate to this company that you're a legitimate business, with a legitimate product or service, and business credit is one of the tools that they use, quite frankly, to verify that.
Yeah, I mean, if we continue with this example, because it's so critical and applies in so many different types of businesses, I'm bringing to mind when I had the self-serve frozen yogurt restaurants, and we had a supplier who provided with all of our fruits and the mixes that we made the yogurts with, and all of that, and they delivered twice a week for us, sometimes once a week depending on our needs. But there's a business where they're delivering to us, and we had to apply for credit so that we weren't having to pay the driver with a check or a money order right on delivery, right? That's never ideal. But so they extended some level of credit, but the risk then all goes to them because they could have delivered all that product. It's gone. They can't come get it back. And if we, like you said, are out to get them or go out of business or don't have the money, then they've got to pay their bills, right? So they're in essence lending us money by giving us the product without getting money up front, right? And so it's a type of lending that facilitates me as a business owner. In that case, it was great for me to be able to get this product, sell it, and then pay that invoice, as opposed to having to pay it while the stuff is still on the shelf and I haven't even been able to sell it yet.
Yeah, exactly. And that's the cash flow. That's the beauty of supplier terms for cash flow. It can be really critical to a small business.
Now, beyond that, as we mature, as the business grows, then we start talking about things like lines of credit and other things, and maybe a loan for expansion or growth or financing for equipment. All of those things then come into play, which traditionally I think that most people think, well, I'm going to have to co-sign on that or personally guarantee those loans. But boy, it sure would be nice if I'm successful with my business and I show a history and a track record to be able to get to a point where I'm no longer tied to that liability personally, right?
Yeah, absolutely. And it does take a process. So I think that's the one place where I would say there's a lot of misleading information online that makes it sound like if you build business credit, don't worry about your personal credit. You're never going to need to use it. You're going to get
Hmm.
all the money you want with no personal guarantees. Lenders love personal guarantees.
Absolutely.
You mentioned SBA loans. SBA loans, they always require a personal guarantee of anyone. And it's an unlimited personal guarantee. Anyone who owns 20% or more. I shouldn't say always because there were those PPP loans and some
Right.
EIDL loans that had an exemption, but that's not the norm. So, and banks in general, at a minimum, love to check personal credit. But as you grow your business, the goal is to get fewer and fewer of those and more where it's just based on the history and financial capability of your business. And business credit is one piece of that. It's not the only piece. Revenue is important. Time in business is important, but credit is one of those pieces that can help you move in that direction.
This is Henry Lopez with a brief break from this episode to tell you about our sponsor, Box Hero. Running a business means keeping track of a lot of moving pieces, and when your inventory isn't organized, it can cost you valuable time and money. Maybe you've oversold a product that wasn't actually in stock, or you're guessing at reorder quantities because your spreadsheets are out of date. That's where Box Hero comes in. Box Hero is an inventory management solution designed specifically for small businesses. It's simple, visual, and helps you track your stock in real time across multiple locations. You can scan barcodes, check stock levels from your phone, and never worry about losing track of what you have. Box Hero makes inventory management actually manageable without the expensive price tag of enterprise software. I invite you to try Box Hero free for 30 days with no credit card required and see for yourself why Box Hero is the simplest solution for small businesses to track, manage, and organize inventory. Just visit boxhero.io. That's boxhero.io and sign up for a free account. You can also download the Box Hero app from the App Store or Google Play to manage your inventory on the go. So we've talked about financing. We'll talk more about that. Vendor relationships. We just talked about that. How might it also affect a partnership, let's say? Do you have any examples or thoughts on how it might impact my good or bad credit, might impact a partnership? And
Yeah, this
partnership could be somebody's buying in, or it could be an affiliation of some sort or a marketing partnership. It could be any of those types of situations, right?
Yeah, if you're thinking of a business partner as someone who will run your business with you, my best tip here is talk about your credit with each other because if you do go to apply
Mm,
for some of those types of financing, they may require a personal check, credit check, and personal guarantee of both of you. I was at a workshop with a panel of bankers, and somebody stood up, a business owner, and said, "Hey, I have good credit. My business partner does not. Is there any way we can apply for a bank loan without bringing, his credit into the equation?" And all of them said, "No, we are
yeah.
going to check
And
both of your
of course
credit."
you had made the qualifier with SBA. If he had been 19% or less, maybe not as impactful, but conventional, it doesn't matter what percentage necessarily. It's up to the underwriting as to what they want to look at.
It is. It's up to the lender to determine, but generally you'll find lenders are going to, any kind of key ownership in the business is very often going to trigger, if they do check personal credit, trigger, the personal credit check. They want to cover their bases, right? They want to make sure that, and it's possible that one of you could drop out of the business, the other one takes over the business. So they really want to check that in many cases. Again, we can never say always every time because every lender is different, but it gives you an idea. And then on the flip side, I think one of the things when you're talking about partnerships that we may overlook is as you move into bigger and bigger clients and customers, very often they want to look at these kinds of things too to assess your capability of delivering on whatever it is that you are going to provide their business. So let's say you do want to, let's say, clean parking lots and you want to work with that big box retailer. There's a good chance there will be a financial check for sure and some sort of business credit check as well. I did a webinar for accountants where one of the accountants, reached out to me afterwards. She said, I worked in supplier relations for one of these big box retailers, and we always checked Dun& Bradstreet on
Interesting.
potential suppliers. Again, this is a measure for them to just look at all the pieces of the puzzle and see if it adds up and it shows that your business is financially capable. And then insurance could be another one. So as you grow,
Mhm.
you may need to get surety bonds, you may need to get more insurance to cover a particular job, or a client may require it. And sometimes a business credit check can be part of that insurance underwriting decision as well.
Yeah, no, makes sense. These larger corporations, they're trying to protect themselves, even if they're not depending on us, let's just say, for a product that they're out of pocket on, or our ability to deliver, and they've made a commitment, or they've made forecasts based on that. The simple example of cleaning a parking lot, you might think, well, they could just get another vendor. No, but that requires work on their part, and also they want to know they're accountable to their stakeholders, to their shareholders, and so they're trying to associate, obviously, with reputable businesses as well. Right.
Yeah.
And so it all comes into play as to why they look at your credit. It isn't just to make sure that you're going to be around to clean the parking lot next month, but that you're a reputable business that they're associating with, right?
Right. And you're not going to cut corners, hopefully, right? So
Exactly. And damage
yes.
somebody's car or do
Yes.
something on their property. All of those kinds of things come into play. And credit is one way that people look at how legitimate, how stable is this business. All right, so let's start with kind of some of the first steps. Where do I start? I think maybe, Gerri, if we take it in stages, if I'm just now starting my business, so I'm still in that startup mode, first 1 to 2 years, what can I start to do if I'm that type of business to begin to take the steps here?
Yeah, I would say the first thing you need to do is think about if you're a sole proprietorship right now and you're eyeing the option of forming your corporation or LLC, I would think about doing that before I started building business credit. And the reason I suggest that is that you can build business credit as a sole proprietor. So if you know you're going to remain a sole
Mm,
proprietor, that's fine. But when you form that business entity, you have to, usually there's some legal parameters around the name, right? So the name might
right,
change, and then you also have to get your EIN, and so
right.
the EIN will change from what you might have had before if you were using an EIN, which is an employer identification number, by the way. It's the number for the IRS. So it's you may lose what you've done. So think about
Because
that.
because previously as a sole proprietor is tied to my social, now the EIN is the equivalent of the social for a business, and now it gets associated with that number
That's right. And when you form
and the
the
name as well.
entity,
Yeah.
yeah, you need to get a new one. In some states, you have to put LLC or Inc. in your name or whatever the requirements may be. So think about that. But once you're ready to do this process, then the key really here is to get accounts that report in the name of your business on your business credit. And it's easier said than done. And you don't have to
Mhm.
go into debt, but you do have to identify companies that will report on a regular basis to business credit. Not all of them do. So in the personal credit world, we're so used to, we get a car loan, we get a credit card, they report to all three bureaus. I mean, that's
Right,
almost a given these days, right? It's
right.
very unusual for it not to happen. Business credit, not so much. So you may have to be proactive and seek out some suppliers that report to business credit, for example. You may have to look for business credit cards that report to business credit, and then establish an on-time payment history, keep your debt in check, take these things because your goal is to have a positive payment history with the credit bureaus, because the positive payment history is what they are going to use to help create a business credit score. It's usually the most main factor in almost virtually any credit score that I'm aware of,
Yeah.
is how you pay and whether you pay on time. But that's the number one thing I see, is that even businesses that have been in business for 10 years go to check their credit and then they discover,
There's
I
no
don't have a credit
there's
history.
no history. Yeah.
Right. Or my score is low, and it's not because you did anything bad. You don't have any negative information on your report, but you don't have positive information either. And so they can't calculate a credit score well.
Are there some examples that come to mind of types of vendors that you've seen that are more likely to report?
Yeah, so at NAV, we find that the net 30s are usually a place to start. And we have actually compiled a list on
Okay.
the NAV blog of net 30 vendors. Many of them do not check personal credit, and many of them report to at least one major business credit reporting agency. And so that may be one of the steps that you want to consider. And then NAV Prime, which we can talk about later, also submits monthly as a trade line to major business credit bureaus.
And just for definition, when you say net 30, these are vendors that extends the terms, which is they give me the goods or services and then bill me and it's due 30 days later. So they're extending me credit by default. And those types of vendors are more likely to report, is what you're telling me.
Some of them do report, not all
Yeah,
of them do.
not all of them, but those types of vendors are more likely to report. Yes.
Yes, and I feel like I need to change it for we use net 30 in the industry, right? But
Yeah,
it's
yeah,
it's
yeah.
like it's like buy now, pay later. I mean,
Yes, yeah.
it's
Whatever
buy right.
whatever the terms might be,
Right.
vendors who extend terms are because they are more dependent on that data themselves. Is this client credit worthy? They may be more likely to be contributing history to the two credit agencies. Is that what I'm
Yes,
understanding?
the top credit agencies, and they know too that if they report and their customers know that, that's an incentive to pay on
Of course
time,
it is.
right? So
Yeah, exactly.
if you know it's going to show up on your credit report, you put that bill at the top of the
Is it
pile.
is it similar to with personal where with the ones that do report do so monthly, or is it more or less frequent, or how does that usually work?
Monthly is the most
Okay.
common reporting cycle for business credit if they report. So there are some that only report negative information. They don't report positive. They'll only report if you pay late. And it's possible they could report less frequently, but then that leads to less accurate and helpful information for the credit bureaus. So they really want to encourage that regular monthly reporting on their end so that they can produce the credit scores that lenders want to purchase.
All right. So I interrupted you a couple of times there, but summarize then for me. So let's stick with that early stage. You're trying to make sure, and of course, it depends on the type of business you're in, where you've got vendors, as we call them, net 30 vendors, where they're extending you terms. Let's say it is a business that doesn't have that. What tips or ideas do you have there? Well, how else might I get some credit history?
Yeah, so my business, for example, is a consulting business.
Hmm.
And for my business, I don't need a lot of products, but I these companies do offer things like shipping boxes and paper and ink toner and things that I can use in my business. So I could just go to an office supply store and get that, or I could get it off of online. But if I go through one of these companies that reports, then I'm building a credit history. There's some that offer promotional products, for example. So maybe you want t-shirts for that, trade show that you're going to or whatever it may be. So there's usually something you can find that would fall in this category. Now, the other option would be a small business credit card that
Right.
reports to business credit. And as I mentioned, most of them report to at least one of the major credit bureaus or the Small Business Financial Exchange, which is kind of a warehouse that works with the credit bureaus, a data warehouse that works with the credit bureaus. So that's another option. And I'm personally a fan of credit cards, even though
Mhm.
I know they can be you can get in trouble. So I'm not encouraging anyone who thinks they're going to overspend. But in terms of just a pure payment method, I like them because they have the greatest protection when it comes to fraudulent use. $50 is your maximum liability. You can dispute a charge if the thing you buy wasn't delivered as agreed. And, you just have this additional protection with this payment method. Some of them offer virtual card numbers, et cetera, that you don't have if you pay by cash or ACH or something else. So that's also just another thing that feeds into it. But from the credit perspective, a business credit card that reports that you pay on time and you keep the debt in check can be a valuable reference on your business credit reports.
Yeah, I think it's huge, Jerry. I think all small business owners, I get your point. So thanks for clarifying that we don't want to get ourselves in credit card debt, and we're not proposing that. But I think you need more than just a debit card. And in fact, a debit card can be dangerous in the way that it accesses money directly. But a credit card, and the way I use a credit card in my business is I pay it off at the end of the month. Rare exception when I might be having a really tight cash flow month in some businesses. But not only does it give me that protection from a purchasing perspective, it gives me some float, right? So it gives me some advantage there where if I get the whole cycle, I might have up to 45 days now to come up with that cash. So why not take advantage of really free money there from a time perspective? I always get a card that has some kind of rewards or points. So I get that added value. And then through the point here of this discussion, the credit. Now, if let's say I'm doing my banking with one of the major banks and I go and get a credit card in the name of the business, usually you're personally guaranteeing on that. But is that by default creating credit history in the business's name as well?
As long as it reports to business credit bureaus, yes. And again, all the top 10 report at a minimum, top 10 issuers report at a minimum to the Small Business Financial Exchange, which works with all the bureaus. So
Yeah.
you've got that. And then some of them report to other bureaus directly as well. And it's a financial reference on your credit report. And the credit limit may be pretty good. I mean,
Yeah.
you could have a 25, 50, $75,000 credit limit, and that's also a factor that could go into the calculation of the credit score. So all around, if you can manage it well, it could be a very helpful tool on both the financial side as well as the credit side.
Then I could start to, and this is where having the credit, but then building more of it kind of comes together, a little bit of a catch-22, but equipment financing. If I'm at a point where I can qualify for that, and then that's another way to continue to build that credit history is by paying on an equipment financing loan, right?
Yes, and for the businesses who don't need heavy equipment, remember a lot of IT equipment can be financed as well. So if you
Yeah,
need that and it makes sense for your business, that's another option that can also preserve cash flow. And as you know, there's some, well, because you work with the bookkeeping side, there may be some tax breaks there as well.
exactly. All right, what are we've talked to some of them, but what are some of the common mistakes that you see that business owners make as it relates to credit, business credit?
I think that, another one is just not checking and not monitoring it. During the pandemic, those fun times, I was hit with both personal and business identity theft.
Really? Wow.
The thieves opened up bank accounts in my personal name, applied for unemployment, even though I had a full-time job at the time. And they also applied for small business financing in the name of my business. And I
Goodness.
caught it because of my credit monitoring. And weirdly enough, there are some reports that business identity theft is easier than personal identity theft
Mm,
because business owners aren't checking and so they
we're
don't
not checking it.
catch it, right?
Yeah.
And they're also targeting businesses that have recently shut down or slowed down. And then sometimes I mean there's some wild stories, packages being delivered to a business that had gone out of business 3 months before, and the next door neighbor calls the former owner and says, "Hey, what's going on? Didn't know." So you just want to take a look and see what's going on. So if there is something suspicious, you're acting quickly as opposed to later. Now, another tip I'm going to give that is really kind of granular, but it's an important one, and that is UCC filing. So when you get most types of small business financing, there's some sort of collateral involved. I mean, it could be your accounts receivable, it could be your inventory, it could be hard equipment, things like that. And what happens then is the lender will file something called a UCC lien, Uniform Commercial Code. They just go to the courthouse or do it online and they file a notice with the courthouse saying, "Hey, we have interest in that, we have interest in that frozen yogurt machine. We're pledged. If that business defaults, we're first in line." So what happens sometimes is they don't always release the lien. So
Right.
they place it.
Yeah.
It's like that Seinfeld episode, right? You could reserve the car, but you don't have the car. So they place the lien, but then you pay it off and they don't release it. And then what happens is you go for the next type of financing, and that lender looks and says, "Well, all their assets are already tied up."
Mm,
And so they say no. So you have to check and see if it's on there, and if it's on there, that it's up to date, so that if it's not been, released, or it'll probably still be reported, but at least to show that you satisfied that financing debt, then you can go on to the next thing. So that's another one that's a little bit obscure, but it happens more than you would think.
Oh, no, it's critical. I'm glad you brought it up. So let me just add a couple of points there. This comes up. I always tell people as they're negotiating when they're first starting a business, if you're having a contractor do work, let's say you're finishing out a retail space, where people get caught there is that general contractor has subs that might do work, like maybe they installed the HVAC system. Though, if they don't get paid, they will put a mechanical lien on you. And you may not even know this because your general may not have paid your sub. And so I always ask people to make sure that there's language in there that before that final payment to the GC, there's proof of lien release from everybody. I also had a situation in another business where I had to replace one of the HVAC systems. We're talking about, $15,000 to $20,000. So when they do their work and they do it on terms, they may have filed a lien as well. That we got to make sure, to your point, gets cleared. They may not follow through on that. or if I have any kind of problem. The other thing I've done, and I don't remember the details of it, but in different contracts, I've put a stipulation that liens can't be filed after X amount of time. Because if you leave that open, what I've experienced is they could come back later and say, oh, we never got paid on this. And they come back to you 24 months later. Well, there's at least in certain states, like in Texas, there's a period of time within which a mechanical lien can be filed. The takeaway is this: you got to be aware that this happens, and you got to make sure that that doesn't happen to you and you don't know about it, right?
Yeah, absolutely.
I want to go back to the credit monitoring. How and where do I do that as a business owner?
I am working with NAV, and NAV is in my mind, the place to do this, because it's really that's why NAV was developed, to help business owners do what we do as consumers. So NAV will let you check, manage, and monitor your business credit and personal credit in one dashboard. So there's a completely free option that gives you a snapshot and lets you know where you stand. So let's say you have a business that's maybe a year old or even a couple years old. You can go in for free and see whether there's business credit about your business, right? Because that NAB will contact the credit bureaus and you'll find out whether, you have any business credit. And then if you want to get the detailed credit reports, get the scores, and get ongoing monitoring along with other tools, the NAV Prime, which is a paid service, does that. And that, as I alluded to earlier, does report, it submits monthly to the major business credit bureaus, which allows you to create that additional trade line or additional account. Trade line is a word that you hear come up in business credit. It just means account that shows up on your credit reports. And so it allows you to create that additional trade line. And a lot of people like it because it's not dead either, right?
Right.
You don't
Okay.
take out a loan to
But
get
I
it.
lost you there. Me as a company, what am I reporting through this tool?
So what you're doing is it's the easiest way to think about it. It's like you're using Credit Karma, but it's for your business. So you're going to sign up for NAV. You will find out, you'll match your credit reports if if your business is in the Business Credit Bureau databases. And then you will, each month when you log in, you'll see updated business and personal credit scores, and then get a variety of financial tools that go with that as well. So it will basically let you check, manage, and monitor your business and personal credit in that
And this
dashboard.
is Prime is a monthly subscription, I'm guessing?
Correct.
Okay.
Correct. Yep.
Month to month, there's any level
Yep.
of obligation. Okay. All right.
Nope. Just month to month.
Excellent.
Yep.
Where do I go to get more information on that?
Just nav.com. So NAV as in Victor.com is the website.
And so since we're on it, tell us about the guide that you have available on credit.
Yeah, so if you want a step-by-step guide to building business credit, and we've tried to make it as simple as possible. I've worked on this, so if it's not simple, you can come back to me and tell me. But it is at nav.com/Gerri, my first name, Gerri, nav.com/Gerri. And that will walk you through all the steps and give you the resources, links, things that you need to figure out what to do next. So
Perfect.
that's a free guide.
Excellent. Excellent. All right. We'll start to wrap it up. What have I not asked you about related to business credit? Actually, before I go there, I'm looking at my notes. I think we've touched on it, but if I have bad credit, business credit, in our personal world, what we do is we work, either I work with a credit counselor or I work on, not getting late payments and reducing debt. But are some of those, and what other strategies if I've got, let's say I defaulted on a lease or I had to default on a loan and that's on the history. What can I do to start recovering from that?
It's very much the same principle as consumer credit. You want to have accounts that show a positive on-time payment history moving forward. So, but what I see more often than I would imagine is the business owner who, again, hasn't done anything wrong. There's nothing negative on there. There's just not any payment history. And so without that payment history, a credit scoring model can't really predict how you're going to pay in the future. That's sort of the engine, right, behind credit scoring is your past payment history. So that seems to be a more, common scenario. But if you have negative business credit, very similar to personal credit, you're going to try to, make sure that you resolve any unresolved issues and then build accounts that you can pay on time going forward.
All right, let's finish it with now. If I move forward to, I'm an established company. I've got a few years of history. I'm profitable. I'm starting to grow. Now, how does it change my strategy and tactics on continuing to build business credit? What do I know I've been establishing history. What do I do next to get it to that next level?
Well, the next step is going to be getting financial types of loans, accounts, lines of credit that will be reported, and hopefully with, larger credit limits. And one key in that equation, I mean, credit is one factor, but we also mentioned time in business is another factor. But your financials are another factor. And
Right.
so, I know that you are heavily involved with, the world of bookkeeping, and it's not very fun for most business owners.
Mm-hmm.
But having your books up to date lets you give those lenders the financial information they need to lend with more confidence. And so if you're waiting until tax time to figure out how your business did financially, you're probably also affecting the opportunities that you have for financing. Many lenders will look at the financials, your bank statements, things like they'll want an up-to-date profit and loss statement to help you get to those next, loans or lines of credit. And so as you start doing that, then the bigger opportunities become available. And I talk to a lot of business owners say, I don't want to borrow. I don't want to go into debt. And I respect that completely. But sometimes you have to seize the opportunity
Absolutely. Yeah.
with debt because there may not be another way to open that second location, or there may not be a way to acquire that equipment from another business that's shutting down but has a really good deal on, what they're selling without financing. So I'll tell you another quick story. Another accountant, she told me that she had been working with a client who was liquidating his jewelry store, and he had a whole bunch of Pandora jewelry, those
Hmm.
charms and things
Right.
that she was going to be able to get for a very, very good price. And she knew that she could sell it, on eBay. Because she had some experience with doing that kind
I
of selling,
see.
but she needed a big chunk of money to do it.
Yeah.
Right. And so that was an opportunity, not just a crisis where, oh, I have to borrow. It was an opportunity to borrow with in her case, confidence that she'd be able to make money off of it. So I just want to add that flavor because sometimes I think, some of us are so debt averse that we don't always know that this could open up positive opportunities for growth.
I couldn't agree with you more, Jerry. And thanks for that example and putting it in that context of being able to take advantage of an opportunity. But you're absolutely right. And I talk about this a lot and actually did an episode on it specifically because what happens is we bring to our business our personal finance guidelines where we avoid debts, especially consumer debt at all cost. But in business, we must leverage other people's money, as the old saying goes, in order for us to grow. And in fact, when you run the ROI numbers, even let's say I'm going to start a business for it, it's going to take me 200,000. I've run the numbers many times, and I don't understand the math behind it. But the less amount of my cash within reason, so that I can cover the debt service that I put in, the better the ROI. But also there's these opportunities for growth. But I think you said it well. If I'm having to borrow a lot of money because my business model is broken, in other words, I'm keeping it afloat by continuing to borrow, that's bad. That you're just throwing, good money after bad. But if I'm carefully leveraging debt, and one of the ways that I can better and better get better debt is by having a good credit score, personal and business, that's the only way to really scale a business. We have to leverage those loans, other people's money to get there, has been my experience.
Yeah, I like that perspective. Thank
Yeah.
you.
All right. Anything else that I didn't ask you about related to business credit before I ask you to summarize here?
No, I feel like we've covered a lot.
I know we talked about the guide. That's at nav.com/Gerri, Gerri. I'll have the link on the show notes page for this episode in case you're listening somewhere where you can't write it down. What's one thing you want us to take away, even if we're repeating it, because that's good for us to take it, keep it in our heads? One thing about business credit you want us to take away from this conversation?
Put it on your radar. Just put it on your radar. It's one of those, financial pillars that it's not the most fun or sexy thing to deal with, just like that bookkeeping that we just
Right.
mentioned. But it's one of those things that when you want it and it's there, you'll be glad you did.
Agreed. And tell us again where you want us to go to learn more about you and about NAV.
nav.com/Gerri, Gerri. And I'm on LinkedIn and I love to hear from small business owners. So always feel free to reach out.
You really are a great resource. I thank you again for taking the time to be on the show with me today and sharing your vast knowledge and your responsiveness whenever I have a question. Thanks again, Gerri.
Thank you.
This is Henry Lopez. Thanks for joining me on this episode of The How of Business. My guest today again, Gerri Detweiler. Thank you. I release new episodes every Monday morning. You can find the show anywhere you listen to podcasts. including at the How of Business YouTube channel, and of course at my website, thehowofbusiness.com. Thanks for listening.
Thank you for listening to The How of Business. For more information about our coaching programs, online courses, show notes pages, links, and other resources, please visit thehowofbusiness.com.